Local trade remaining flat this morning after closing in the red yesterday. The JSE falling the most since November on Tuesday as a possible escalation of tensions in the Middle East and delayed interest rate cuts in the U.S. weighed on sentiment there. Let's talk about it with the head of equity research at FNB Wealth and Investments, Chantal Marx. Good morning, Chantal. We always kick off with an overview of some of the latest market moves. So to share with us how they are faring this morning after news as well that the IMF has kept its growth forecast for South Africa and for the global economy broadly unchanged.
Hi, yes, we've had another difficult start on the JSE this morning. I mean, it's not nearly as precarious as the position was yesterday, but we are seeing broad-based weakness of the resources sector. And that's actually quite surprising because commodity prices are quite mixed this morning and the resources sector in Australia wasn't faring particularly well either. Another interesting anomaly on the JSE this morning is that Naspers and Prosus, that are two sector heavyweights, are trading higher as well, even though Tencent, the biggest investment in both of those names, was under pressure in Hong Kong this morning. So divergent fortunes, but unfortunately, we're not regaining any of those losses so far today.
Well, let's talk about safe havens and safe haven demand, and the high dollar has kept gold steady. But oil has lost some ground. What's driving those moves?
Yes, so commodity prices are quite interesting this morning. We are seeing divergent fortunes across the metals space. Gold is slightly lower. Platinum is lower as well, but palladium is holding up quite well. Silver is holding up and copper as well. On the oil front, we are seeing a bit of a pulling back of the oil price this morning. I think that there's a wait and see attitude around what is happening in the Middle East currently, and that is impacting both the gold and the oil price.
Okay, Anglo American's rough diamond sales value for De Beers third sales cycle of 2024 is out, and talk us through how that luxury good is faring.
Yes, so it was actually a pretty upbeat print this morning, even though diamond prices are still quite low relative to the same point last year. We have seen an improvement in the third sales cycle from the second sales cycle. And importantly, the third sales cycle is usually seasonally weaker from a diamond sales perspective. There's not a whole lot going on this time of year to really spur on diamond demand. But it is encouraging that momentum seems to be shifting a little bit in that space. I think the diamond industry and diamond price weakness over the last few years has been a massive concern for Anglo American, and we've also seen them take action in terms of curtailing production.
Let's talk about major metals play now. This is Insimbi Industrial Holdings. It's got a trading statement for the 12 months ending the 29th of February 2024 out. What do those numbers look like?
Well, it doesn't look great. They expect their headline earnings per share to fall by between 50 and 60%. But Insimbi is one of those companies that really bears the brunt of most of the issues that we are facing as South Africans generally and South African industry as well. So really impacted by load shedding, heavily impacted by port and logistic constraints in South Africa at the moment. Regulation is also having a massive effect on their ability to trade because they're also a big metals recycler. And of course, there's been a ban on recycled or kind of scrap metals in South Africa over the last couple of years. So really difficult times for them. They have pulled back their cost base quite a bit. And I think it could have been a lot worse if they didn't successfully control what is actually within the company's control.
Chantal Marx, keep smiling. Thank you very much for that market update. Appreciate you. Chantal Marx is the head of equity research at FNB Wealth and Investments.